spring market stalled a little after a few weeks of promising movement. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, February 27th. We know that selling a house can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as both a home seller or a home buyer. Okay, like always, let's start off by looking at how the market performed this week. There are 42 homes on the market, up from the 33 we had last week. The average asking price of those homes is $1,906,000, a little bit higher than the $1,862,000 we had last week. 6 homes went pending, 2 more than last week, which is a good thing. But the average asking price for those pending sales dropped significantly by $100,000, 147 down from 157. And 10 homes closed this week, but the closing price was much better compared to last week. 10 homes this week for last week, with the closing price being $1,767,000, up from the $1,456,000 that we had as an average last week. Okay, so now we know how the market performed this past week, and next I like to look at the broader trends and indicators that help us know where the market might be heading. Before we do that, if you do find this information helpful, don't forget to hit the subscribe button down below so you don't miss out on any future updates. And while you're down there, why not hit the share button also and send it to a friend? Everyone deserves to be in the know about their local real estate market. Okay, let's look at those broader indicators, shall we? Inventory climbed this week by double digits. We are now in the normal inventory range. This isn't too unexpected, as there have been several weeks in a row with more than 15 coming soon listings. While an increase in inventory by 10 or more homes is manageable, it needs to be corresponding with an increase in pending sales to not disrupt the market. Those pending sales did not keep up. They did increase this week, up to 6 from the 4 we had last week. However, that increase wasn't enough to keep pace with the new inventory. Our turnover rate has dropped again back to just above that 50% mark. That is still better than about half of the previous year that we had last year. You see here so much of our time spent below that 50% mark. But our pending sales really need to have a couple of solid weeks in a row to significantly improve that turnover rate. The over-under number has also dipped back into the under range after a short 3-week stint in the over range. Here we were over for the past 3 weeks. Homes closed for just less than 1% below the average asking price this week. Anything in the plus or minus 1% really shows that buyers and sellers' values are aligned relatively well, but there isn't enough buyer activity to cause the bidding wars that drive the over-asking numbers that most sellers are looking for. So here we are back below that break-even number. Again, somewhere we lived for the majority of last year. The average sales price continued its downward trajectory again this week also. Here we've been dropping off slowly, and it was significantly steeper this week. And now it sits below the 1.7 million range. This drastic reduction in average price is not a clear indication of a reduction in average value. Those two things are related, but not directly correlated. This drop in average price has more to do with the several homes in the 1.4 or lower range, including one Sunny Glen home that sold for under $1 million, which is normal for Sunny Glen since it's a retirement community. But with the small sample size that we have been experiencing, any week where we have a really small or low price closing, that really brings the whole average down. So again, anything under 1 million really drags the average down quickly. This number should rebound next month considering the average asking price on most pending sales currently in the pending range. And speaking of rebounding numbers, the triple Q moved up a little bit this week, ending at just under 1% higher than last week. The overall economy kind of went on a pause over the past 2 months, with all the political rhetoric around tariffs getting a lot of press again. The tech sector didn't really feel too much effect beyond the momentary pause, and the AI race continues to fuel optimism in that section of the economy. If the tech industry continues to feel the boom, it will help maintain our current buyer pool and their enthusiasm for finding a home. And speaking of enthusiasm, our interest rates start with the number 5 for the first time since September 2022. Now, they just barely start with 5, sitting at 5.98%. But it's still nice to see a number other than 6 or more at the beginning of that percentage number. At this point, I think everyone is feeling like they can breathe just a tiny bit easier, seeing the interest rates continue a slow but hopefully steady march downwards. The market started making some movement towards a warmer spring market compared to last year. This week, it stalled out a little. All the lagging and current indicators took a small step back. The biggest setback was the turnover rate. We had more pending sales this week compared to last week, but it wasn't enough to keep the turnover rate from dropping. The good news is that the more predictive indicators, the triple Q and the interest rates, both had positive movement. Hopefully, that means this week was just a bump in the road to a more fast-paced spring market. Here's hoping. Thanks for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to subscribe and ring the notification bell so you can stay informed on how the market continues to shape up as we head into spring. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We are here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.